Well, the global share index has clawed back close to 90% of the correction kicked off when President Trump announced tariffs on Canada and Mexico, and it vastly steepened on Liberation Day, April the 2nd. For context, the global index had a 10-month 26% grizzly bear when inflation rose its head and the Federal Reserve pivoted towards tightening in December 2021. And it took 18 months to get back to 90% of its previous peak. So this has been a mere blip so far. The Aussie market has got back to where it was at the start of the year, before Donald Trump liberated the world from free trade. And here are the chronicles of the US-China trade war of 2025. It looks a bit like an upside-down chart of the share market, doesn't it? And by the way, a 30% tariff on imports from China is still a lot, and more than enough to bring trade screeching to nearly a halt, at least. So I don't know what the market is so happy about. But still, there was a good old relief rally on Wall Street last night, 3.3% on the S&P 500 and 4.4% on the Nasdaq. Asian markets were a little more cautious today. And the local market rose 0.5% with decent gains by resources stocks, while the supermarkets were put in the discount bin for some reason. The Aussie dollar is back above 64 US cents, and on commodity markets, gold and silver fell while iron ore and oil went up. And finally, there was a slight improvement in consumer sentiment this month, and it's worth noting that the so-called misery index, which is simply an addition of inflation and unemployment, is well down, below average, because inflation has fallen without a big rise in unemployment. And that's finance.